Cava stock is getting both fame and fortune as people label it the next Chipotle. So what do you need to know about the company? Keep watching as we take you through a complete analysis of the stock as well as a summary of the company and its functioning. But before we do that, subscribe to our channel $1 World for regular stock market updates. Cava Group shares soared this week when the quiet period following the company's IPO expired, allowing analysts from the major investment banks to release ratings on the stock. Not surprisingly, much of the feedback on Monday was favorable, and the stock was up 20.3% for the week as of Thursday's market closing, according to S&P Global Market Intelligence data. Cava exploded following its IPO last month, and the stock has generally moved flat until this week. A burst of favorable analyst remarks, on the other hand, gave the stock a lift on Monday, providing momentum over the following days with the support of a lower-than-expected inflation data on Wednesday. 6 analysts launched coverage of the stock on Monday with buy-equivalent recommendations, while 2 rated it as a hold equivalent. For example, JP Morgan Chase analyst John Ivanko, who gave Cava a buy recommendation, said it had a broadly appealing consumer offering, putting it in a good position to grow beyond its existing 263 locations and become a national brand. Meanwhile, Sharon Zakvia of William Blair forecasted that the business will achieve at least 20% sales growth through 2026 and a 9x increase in adjusted earnings before interest, taxes, depreciation, and amortization. It had an outperform rating from Zakvia. The stock jumped 11% on the announcement and proceeded to rise on Tuesday and Wednesday, gaining 3% on Tuesday and 14% on Wednesday, when the Consumer Price Index grew just 3% year over year, the weakest rate since March 2021. The data makes it less likely that the Fed will raise interest rates further, and it shows that the economy should be able to escape a recession, which is excellent news for Cava as both a cyclical restaurant chain and a growth company. On Thursday, the stock fell 8.3% on no news, possibly indicating that investors considered the price had gotten overheated. Wall Street is already debating if Cava will be the next Chipotle. Cava's sales have increased at a compound annual rate of 52% between 2016 and 2022, hitting $564.1 million last year. Last year, comparable sales increased 14.2%, and adjusted EBITDA profit ranged from $12.6 million to $14.6 million. Its restaurant-level operating margin of 20.3% is also strong and should generate profitability as it expands. Many smaller restaurant businesses have failed in the past, but Cava appears to be a potential newcomer. However, with a price-to-sales ratio at 10, the stock's growth is likely to remain restrained until earnings increase. Let's see some more Cava stock news. Cava's stock price has piqued the interest of all stock traders. It is regarded as one of the most successful IPOs of the year, with the stock price nearly doubling on its first public offering. Following a temporary reversal, the stock is once again on the rise. On Tuesday, U.S. markets saw greater volatility as traders gambled on the release of the June CPI figure. The benchmark indexes finished in the green, indicating a favorable market attitude. Cava shares finished the day up 3.3% following a very erratic price movement. The recently ended Cava IPO priced 14 million shares at $22 apiece, with the restaurant chain aiming to raise $318 million. The stock soared immediately following its first public offering and nearly quadrupled in its first trading day. This drew many additional investors, who purchased the dip as the stock fell in the days that followed. T. Rowe has recently bought an 11% interest in Cava, according to the latest report. The investment was valued at $557.5 million at the time of purchase, while many Wall Street experts, including JP Morgan and Jefferies, remain positive on the Cava stock price. Morgan Stanley and Citi remain wary. Since going public in mid-June, shares of the Mediterranean fast casual chain have more than doubled. In the initial Cava commentary, Wall Street analysts were overwhelmingly optimistic on the company. There are 4 strong buy recommendations, 2 buy ratings, and 2 hold ratings on the stock. Seeking Alpha analysts gave the stock 3 hold ratings and 1 sell recommendation. Despite the increase, experts do not believe the stock is expensive, even with expectations sky high, according to Piper Sandler on Monday. The stock's premium valuation could be justified by its AUV and unit count growth opportunity, as well as the potential for solid operating momentum to cause upward revisions to near-term estimates and long-term earnings potential, Stifel analysts said on Monday. For those of you who don't know Cava, Cava Group Incorporated is a publicly traded restaurant company that owns and operates the Cava and Zoe's Kitchen brands. The company was founded in 2006 by Ted Xanaristos and Dmitry Mashavidis, and is headquartered in Washington, D.C. Cava Group has over 450 locations in 22 states, and is the largest restaurant operator in the Mediterranean category in the U.S. Cava restaurants offer a customizable Mediterranean menu that features salads, bowls, pitas, and spreads. The company's mission is to bring heart, health, and humanity to food, and its food is made with fresh, high-quality ingredients. Cava also produces a line of Mediterranean dips, spreads, and dressings that are sold in grocery stores across the U.S. The company's name, Cava, is a reference to the ancient Roman word for cellar. This reflects the company's commitment to using fresh, seasonal ingredients. The menu at Cava is inspired by the flavors of the Mediterranean and includes dishes such as falafel, hummus, grilled chicken, and grilled salmon. Cava restaurants are designed to be inviting and welcoming. The atmosphere is casual and relaxed, and the staff is friendly and knowledgeable. The company also offers a variety of catering options, making it a popular choice for parties and events. In 2021, Cava Group went public on the New York Stock Exchange. The company's stock price has since risen significantly, and it is now valued at over $5 billion. Cava Group is well positioned for continued growth as the Mediterranean diet is becoming increasingly popular in the United States. Cava Group is committed to giving back to the communities it serves. The company has a number of corporate social responsibility initiatives, including a program that provides scholarships to students who are pursuing careers in the food industry. Cava also partners with local farmers and suppliers and supports a number of charitable organizations. Cava Group is a leader in the Mediterranean dining space. The company's focus on fresh, high-quality ingredients and its commitment to giving back to the community has made it a popular choice for diners across the United States. In addition to its traditional restaurant business, Cava Group is also expanding into new areas. In 2022, the company launched a ghost kitchen concept called Cava To Go. Cava To Go offers a limited menu of Cava's most popular dishes and is available for delivery and pickup. The company is also planning to open a number of new Cava restaurants in the coming years. Cava Group is well positioned for continued growth in the years to come. The Mediterranean diet is becoming increasingly popular, and Cava Group is the leading restaurant brand in this category. The company is also expanding into new areas, such as ghost kitchens and delivery. I believe that Cava Group has the potential to become a major player in the restaurant industry. In the midst of this polarizing stock market environment, Cava stock has become a focal point of contention among shareholders and Twitter users alike. Some are fervently warning that Cava is a high-risk investment, forecasting an imminent downturn for the company's shares. They cite concerns over potential overvaluation, competitive pressures, or adverse industry trends. On the flip side, a passionate group of investors remains optimistic about Cava's future, asserting that the stock will continue its bullish trend. These proponents point to the company's solid financials, strong growth potential, and positive market sentiment surrounding its products or services. As debates about Cava's prospects continue to intensify on social media, the stock's trajectory becomes an even more closely monitored topic in the investment community. To end it off, Cava definitely seems like a good buy when compared to its competitors, and it honestly would not be such a bad thing after all to name it the next Chipotle. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you richer in the comment section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.